Alrighty, guys, so we have to go over a couple of things. Well, I guess it's really just one main thing that I believe could send the stock market lower in the short term. Key phrase there is short term. Will this be a long-term issue? I highly doubt it, but in the short term, it's probably going to be an issue. So if you guys find value, hit the like button, subscribe, drop me a comment down below, check out my Patreon, and make sure to get 50 free bucks from M1 Finance and 2 stocks from Webull up to $1,600. All of those, the Patreon, the free money, are linked right down below. And with that being said, let's get right into the video. So before we even dive into what I believe could send the markets lower in the short term, and no, it's not the Omicron variant, it's not the Fed, it's something else. Before we get into that, let's talk about what the markets are doing as of now. It's currently 11:25 a.m. on the East Coast, and you guys are probably going to watch this video an hour or two after I actually film it, so it could be, the markets could be different when you're watching this video, but as of now, at 11:25 a.m. on the East Coast, we have the S&P up 1.3%, the NASDAQ 100 is up 0.5%, we have the Russell up almost 2%, and the Dow is up 1.7%, and we also have the VIX down. The VIX is down, which is a good sign. It is down about 7-8% as of now. So, look, what we're noticing is another relief rally in the markets, right? We've seen the same pattern play out probably 3-4 times just over the past 1, 2, 3, 4, 5, 6, 7, 8 trading days. It's been playing out the same every single time, right? We've gotten oversold after a very big drawdown, which is what we got yesterday. So we got oversold, and now we're simply seeing a relief rally after taking out the lows yesterday. Yesterday we took the lows out from the previous day, and you can see this happen a couple of days ago. You know, we saw a relief rally, we dumped, then we saw another relief rally. So what we're seeing right now is simply a relief rally after we took the lows out from the previous couple of days yesterday, and we're also kind of noticing a double bottom breakout relief rally, but it's not a reversal yet, guys, because overall we're still under the main moving average on this 10-day chart on SPY, which is where we got rejected not once, not twice, but 3 to 4 times over the past just couple of trading days. So this is worrisome. I think, you know, yes, it's great that we're rallying, but I think as long as we're under this moving average, this rally, double bottom rally, could very well be yet again a bull trap. And that's the same thing with triple Q pretty much, right? Triple Q, we took the lows out today pre-market, and yesterday we hit a low, and we went even lower today pre-market. I mean, today we went 384. Yesterday we only hit 386, and now we're seeing a bit of a rally. You know, we're almost at 390 again. We're right by the 50 moving average on this 10-day chart, which I wouldn't be surprised if that broke. And now it seems like if it does break that, we might go to 395, and everybody might be like, oh, it's reversing. But the truth is, it won't be reversing at that point, because that is where we got rejected multiple times, and we've proven to see, it's been proven that that has been a bull trap spot over the past couple of trading days. So I'm still a bit nervous here, guys. I'm not convinced the downtrend is over. Now that we got that out of the way, let me know your thoughts down below in the comments. Make sure to hit the like button if you are enjoying this video, as always, and make sure to subscribe if you haven't done so already. I check my analytics sometimes, guys, and a lot of you are not subscribed. So if you're not subscribed, just do me the favor, subscribe, hit that notification bell. And now let's talk a little bit about what I believe could drop the markets lower in the short term. It is Apple and potentially some of the other big tech stocks, but the main thing here that I want to talk about is Apple. So we got some news recently in the past day or two, and now Apple is down about 1.6%. It was down about 3% at one point. We got news within the past day or two that Apple is reportedly telling suppliers that it doesn't expect iPhone 13 sales to pick up for the holidays and beyond. That's according to Bloomberg News. Apple is currently limited by how many iPhones can be assembled with available parts, and not demand, but Bloomberg says Apple doesn't expect customers experiencing long wait time, this is big here, to maintain interest when supply picks up. So right now there's a problem with the parts, right? Not necessarily with demand, but Bloomberg says Apple doesn't necessarily think customers are going to wait around during these long wait times for the supply to pick up. That is huge. That's pretty much saying like Apple, the customers, they're giving up right now. And that's kind of me with the Xbox Series X. You know, if you guys remember, it's still a problem to get one. But it's so hard to get your hands on these new Xboxes that I just gave up and I bought the Series S, the one that's less expensive, but it still operates very well. It's kind of like the same thing. People are giving up on waiting, and that's going to be a problem in the short term, right? And the company has told its component suppliers that demand for the iPhone 13 lineup has weakened. People familiar with the matter said, signaling that some consumers have decided against trying to get the hard-to-find item. Like I said already, that's kind of how I was with the Xbox Series X. I gave up, and I got the other one. But the hope was to make up much for of that shortfall next year when supply is expected to improve, which again is why I said this is a short-term problem, not a long-term problem. And the company is now informing its vendors that those orders may not materialize, according to the people who asked not to be identified because the discussions are private, yada, yada, yada. So overall, that is what's sending Apple down. It's down from 170 now to 161. It's down about 5-6% over the past day or two. And mind you guys, Apple is a stock that was running up in the face of the markets going down, and they just hit an all-time high yesterday. So if this gets worse, and I'm not saying Apple's going to collapse to $120, $110, even $130, but if this gets worse, Apple starts going 150, 140s even, which that might even be a stretch. If that happens at a $2.64 trillion market cap, that is going to drag the markets down, no doubt about it. And let's say we get more fear around Omicron, right? Let's say we get more fear around tapering. We have that December meeting coming up for the Fed. This could be a recipe for disaster. And on top of that, tax loss harvesting, this could end up leading the markets down more in December. So be mindful of that, guys. These big companies, I say it so many times, I don't know how many times I'm going to say it, but I'm going to say it again. They control the markets, right? They have such big weighting, heavy weighting in the overall markets that when they drop, the markets are going to get creamed, let's be honest. And some of these other stocks are trading off their lows as well. Microsoft, the big tech names, this is down $20 from the recent all-time high. In other words, it's down about 5-6%. So if this bleeds a bit more, could drag the markets down. You know, Amazon's another one. Amazon is down about recently 8 to 10% in just the past week or two alone, which is no joke. Amazon's a $1.75 trillion company, guys. So if it drops 10%, we're talking hundreds of billions. That is insane. PayPal, I think I said this yesterday or this morning. I forget. I might have mentioned it on Patreon, but PayPal, it's a $200 billion company. So if a big tech company goes down 10%, like Apple, Amazon, that's like a PayPal just being trimmed off the market cap. It's crazy when the numbers get very big. So keep your eyes on Amazon, Microsoft, Apple, the whole iPhone situation. Google is a big company, right? It's $1.9 trillion. It's now trading about, let's see here, 6-7% off the highs. If this gets lower, could drag the markets down. Meta, or known as Facebook, this one is down recently, just in the past week or two. It's down 12-13%. It's in a bear market, or almost in a bear market. And actually, if you're looking at the all-time highs, it is in a bear market. It's now down 20%. And if Facebook, it seems like it is. I think it already might have. It took the low out from the end of October. If this goes under 300, we're going to see more selling there in the overall markets, probably, with Facebook's market cap being about $860 billion. And, of course, we have Tesla, guys. Tesla is now in the big boy club. It is a $1.1 trillion company. It is down 0.6% on the day. If this gets under let's say the 180 moving average, which right now we're right above it on this 4-hour chart. We're hovering above it, and we're trading in a wedge. If this completely collapses under 1,000, that's not going to be good. So overall, the moral of the story is watch the large caps. They have big weightings on the markets, and talk about, or watch these iPhone numbers, iPhone 13, Apple. I would really just keep a very close eye on Apple out of all these stocks, as they're the most dominant name in the stock market. So let me know your thoughts, guys. Drop me a comment down below. If you all enjoyed the video, hit the like button as well. Make sure to subscribe. Again, a lot of you guys aren't subscribed. Make sure to subscribe and check out my Patreon if you want all my buy, sells, call outs, morning update videos. All that good stuff is on Patreon, link down below, or you guys can go to stocksurfs.com/Patreon. And again, now that it's a brand new month, it's the best time to try it out. Check it out down below, and make sure to also get your $50 from M1 Finance, or 2 stocks from Webull. Also linked down below. With that being said, I'll catch you guys later. Thanks for watching. As always, keep crushing the market. Stay safe out there. Peace out.